Hey, good morning, everyone, and thank you for joining us for this session. My name is Max Cuvelier. I'm the head of Mobile for Development here at GSMA, and it is my pleasure to be your host for this session this morning. I'm very happy to see we have viewers from dozens of countries and from also a very wide range of organizations. But why are we all here? What kind of force gathers us all together this morning? I think it really is a shared belief in the incredible potential of mobile technology. The mobile industry already connects more than 4 billion citizens to the internet, and it continues to play a leading role in the global efforts towards digital and financial inclusion. In Africa in particular, mobile phones have become for most the primary way of accessing the internet, and it actually often is the only way to do so. But it goes way beyond just browsing or going online. It's about driving economic growth. It's about enabling access to basic services. It's also about creating job opportunities, about supporting women's empowerment, and it's about building the resilience of citizens and of businesses. And at GSMA, it's really been an honor to work with our donor partners, with our mobile operator members, with local innovators, with governments, and more to realize this potential. Our Mobile for Development initiatives have already impacted more than 100 million citizens in the past decade, including 46 million in Africa through 128 projects. And I can tell you we're more committed than ever to working with all of you to deepen digital and financial inclusion on the continent. Our session today is here to set the scene, highlight opportunities, but also identify challenges. We will start with digital inclusion and then move on to financial inclusion. So let's talk about access first. Coverage does certainly remain an issue, with 270 million people in Africa who still live in areas without a mobile broadband network. On the positive side, this coverage gap has reduced by 5% between 2019 and 2020, and that thanks to the investment from the mobile industry and despite the difficult context that we know. That said, Africa still represents more than half of the global coverage gap. And beyond this coverage gap, there is a usage gap, which is made of those living in areas with a mobile broadband network, but who are not using mobile internet. And this gap is even bigger. It's actually twice as big as the coverage gap at 520 million people. And for those people, the investments have been made, the networks have been built, but they are yet to come online. So in short, for the continent, that's a coverage gap of 270 million and a usage gap of 520 million. So these are the kind of high-level numbers that I wanted you all to keep in mind. But obviously, the coverage and the usage gap deserve closer attention. So this is why I'm now going to hand over to my colleague Anne Delaporte, who's going to present much more detailed results from our State of Mobile Internet Connectivity Report 2021, which has just been published today. Anne, over to you.
Thanks, Matt. So good morning, good afternoon, good evening, everyone. It's my pleasure to present you today the State of Mobile Internet Connectivity Report 21. It's our annual annual report, and it provides the latest data and trends on mobile internet connectivity to inform progress towards accelerating digital inclusion and reducing the coverage and usage gap. So why is it important that we talk about the state of mobile internet connectivity? As Max said, mobile is a critical pathway to digital inclusion for the underserved. And people coming online are more likely to be accessing internet primarily, and if not only, on a mobile. And those people are mostly located in low and middle income countries. Actually, 93% of the unconnected population lives in low and middle income countries. And to give you just an example, in Kenya, 69% of the population who is using mobile internet uses it only on the mobile. Sorry, who uses internet uses it only on the mobile. So let's start with some good news. During the pandemic, mobile internet connectivity continued to increase. And for the first time, more than half of the global population is using mobile internet, which translates into just over 4 billion people. And global coverage continues to grow, with now 94% of the world population covered by a mobile broadband network. So when we look at mobile internet connectivity, we ask ourselves two questions. The first one is, are people covered by mobile broadband network? And if they are not, we then talk about the coverage gap, which is represented in gray on the map. And if they are covered, are they able to use the mobile broadband networks? And if not, then we talk about the usage gap, which is represented in yellow on the map. So if we start with coverage continues to grow, but progress has slowed, with the coverage gap only reducing by 1 percentage point in 2020. And this is because the remaining uncovered people live in sparsely populated areas with difficult terrain. And as it stands, 450 million people are not covered by any broadband network. And in Sub-Saharan Africa, which is a region with the biggest coverage gap at 19%, we've also seen some of the biggest increase in coverage, resulting in a 5 percentage point reduction in the coverage gap between 2019 and 2020, which is quite impressive. So if we turn to usage, at the global level, the usage gap has reduced for the second year in a row, but remains significant. And it represents now 43% of the world population, which is now 7 times larger than the coverage gap. The reduction in the usage gap between 2019 and 2020 has been primarily driven by an increase in mobile internet use in East Asia. And we can see here on this global map that the biggest usage gap is in South Asia at 61%. And in Sub-Saharan Africa, internet usage is actually growing, with more than a quarter, actually 28% of the population in the region using mobile internet, which is more than twice the usage level of 2014. But the usage gap remains substantial, and is much higher than the coverage gap, standing at 53%. So today, 3.4 billion people are still not using mobile internet, despite being covered. And the barriers to usage are the major issues to address. So I'll come back to that. But when we look at these 3.4 billion people, who are they? So our research found that the unconnected are more likely to be poor, older, less educated, rural, and female. And if we take these two last groups, who have been very affected by the pandemic, our research found that people in rural areas are increasingly using mobile internet, but there remain a significant rural-urban gap. So while we've seen a positive trend and more people using it, there are still more rural people using it. It's still less than people in urban areas. And likewise, the mobile internet gender gap is reducing, but remains significant. So it's quite encouraging to see that so far there doesn't seem to be an overall decline in mobile internet use among women and among rural population in low and middle income countries. But the longer term trends might change depending on the longer term impact of the pandemic. And this is something we need to continue monitoring, because it can have major impacts on the most vulnerable people. So now, if we want to really close the usage gap, we need to address the barriers that prevent people from using mobile internet. And the key barriers I want to talk to you about today are awareness, literacy and skills, and affordability. So first, awareness is a big challenge. If someone is not aware of mobile internet, they won't adopt it, they won't become regular user. And while awareness is greater than ever before, we found that across the low and middle income countries we surveyed, nearly a quarter of adults are still not aware of mobile internet and its benefits. So for adults who are adults who are aware of mobile internet but don't use it, we asked them, what are the most important reasons for not using it? And in each of the surveyed countries, around a third of adults report barriers related to literacy and skills as the most important barrier to mobile internet use. And when we turn to affordability of handset net data, we've seen that affordability has been very impacted by the COVID pandemic. So we measure affordability as a cost of handset or data as a share of monthly GDP per capita. And what we've seen in 2020 is that the cost of an entry-level internet-enabled handset has decreased in more than half of low and middle-income countries, and data costs also continue to decrease. But they are becoming less affordable in many countries. And what does that mean? That in many low and middle-income countries, people lost their job, their income, GDP contracted in 2020. And so this negative trend has not compensated for the decline we've seen in price. So affordability has worsened nearly everywhere in 2020, with the cost of the cheapest internet-enabled handset as a share of monthly GDP per capita increasing in all regions, except in Sub-Saharan Africa, where it fell from 29% to 26%, as you can see on the far right of the chart. That said, Sub-Saharan Africa is still the region where handset remains the least affordable. And we can see a similar story for data, with the median cost of 1 gigabyte bundle as a share of monthly GDP per capita increasing from 2% in 2019 to 2.2% in 2020 across all low and middle income countries. And that means that more than half of the low and middle income countries are falling short of the Broadband Commission affordability target. So the pandemic has negatively impacted affordability, and affordability is likely to remain a key barrier for the poorest. And this is a worrying change when we know that already the lowest income quintile would spend more than 65% of their monthly income on the cheapest internet-enabled phone. And when we're looking at Sub-Saharan Africa, we're talking about a month's salary to be able to buy the cheapest internet-enabled phone. So in summary, given that the coverage gap continues to decline and that almost 3/4 of the unconnected in Sub-Saharan Africa are covered by mobile broadband, addressing the usage gap is the primary challenge. The world needs a collective effort to bridge the digital divide, and policymakers and regulators should shift from the traditional infrastructure-focused approach to a more people-centric one. So thank you for listening. I encourage you to read the report that provides more findings, as well as a deep dive on urban, rural, gender, and gives more information and data at the country level. I will now leave you with my colleague, Angela Vamola, who is going to lead the panel discussion on this topic of digital inclusion. Thank you.
Thank you, Anne, for those remarks and showing us what the report has as insights this year. Now, the mobile industry in Sub-Saharan Africa has risen to the challenge of keeping individuals and businesses connected, particularly during this pandemic. And digital growth has been underpinned by strong, informed leadership and partnerships where despite the global crisis, mobile has continued to lead climate action and enhance millions of lives through the delivery of services in areas of healthcare, agri-tech, and commerce. To delve us further into our discussion, I invite you to hear from two leaders whose mission in the region is to accelerate digital and financial inclusion. Please welcome to the stage with me our distinguished panel of speakers, Mr. Andrew Rugege, Regional Director for Africa ITU, and Mr. Irshad Gauss, General Manager, Group Consumer, MTN Group. Gentlemen, please introduce yourselves briefly to the audience as we kick off. Andrew?
Thank you, Angela. Thank you very much. First, let me congratulate you and the entire team on this excellent report. I haven't read it. I think it was still under embargo, but I do hope to go deeper into it. But from the sounds of it, my sincere congratulations. As you've already said, my name is Andrew Rugege. I'm the ITU Regional Director for Africa, and I'm also representative to the African Union and the UNECA. I'm based in Addis Ababa, Ethiopia, where I'm based now. And yes, passionate about both things that you mentioned, digital transformation, digital inclusion. All inclusion, but particularly digital. So perhaps I'll leave my colleague to introduce himself.
Thanks very much. Thanks, Angela. Good morning and greetings from South Africa to everyone at MWC. It really is a privilege to be here. So like you mentioned, I'm Irshad Gauss from MTN Group, and I'm a general manager in the consumer team, and super excited to be talking about what I believe is a critical focus area for us today. So excited.
So as we heard from the presentation, 53% of our population in Sub-Saharan Africa live in an area with mobile broadband, but have never used mobile internet services, highlighting the importance of addressing the usage gap. So looking further into this challenge, the report highlights key barriers such as the affordability, awareness, and a lack of literacy and digital skills. Irshad, does this resonate with what you are seeing in MTN markets in the region? And what has been the central focus for MTN?
Thanks, Angela. Yes, it certainly does resonate with us. Maybe to start, at MTN, our core belief is that everyone deserves the benefits of a modern connected life, and data adoption is obviously critical to achieving that. So to address these barriers, we developed the Chase framework a few years ago, where each letter of Chase actually addresses a core barrier that needs to be overcome to connect the unconnected. And coverage, which is represented by the C, is really just one of the pillars. In order to meaningfully close the usage gap and to tackle the digital divide, we actually need to address all the barriers in tandem. And this is pretty much an approach that we've adopted at MTN and will continue to do so going forward to close this usage gap. But maybe just to talk about them specifically, and Anne covered a few of them in the report, the remaining 4 pillars of Chase really deal with handsets. So it's the affordability and access thereto. The A stands for affordability, which deals with the cost of data itself. Importantly, the S deals with service bundling to ensure that we create relevant service bundles that actually address the needs that consumers have in their day-to-day lives according to their lifestyles. And lastly, and importantly, is E, that really deals with the foundational element of digital literacy and creating an awareness of digital opportunities. So we'll continue to employ this tandem approach with an ever-evolving mix of initiative under each of the pillars. But what I think the report is really calling out is that as an industry and as a society, we really need to bolster our efforts across these second 4 pillars if we want to close this gap. And the size of the gap actually points out to it actually requiring or needing to be a collective effort between public and private sector and across industries, so that we can really bring internet connectivity for all, which is understandably garnering more support to be called a basic human right.
Thank you. Thank you, Irshad, for that. I think the audience has had the acronym CHASE. You can look it up for more information on the MTN website to understand more about this. Andrew, predominantly, the focus in the continent has been building our infrastructure. Is it time to shift our priorities?
Is that the trick question? Thank you, Angela. You are absolutely right that the focus has been on building infrastructure. And I think it's probably not time to change, but time to adjust. And ITU indeed has already started shifting from the focus, shifting the focus from infrastructure to holistic, universal, meaningful connectivity. And I'll explain the difference. I see infrastructure as putting up towers and getting people ready to just take it up. But in terms of what Irshad has already mentioned and what your report points out, it would seem that we may not need to stop putting infrastructure in place because there is still a gap in coverage, but there's a more worrying gap in usage. And so that is why we need to move to putting infrastructure in place along with quality access, affordability, and use of the internet. And there are various things that are involved in creating meaningful connectivity. As you said, and I think I may be calling old statistics since you have new ones today, but over 12%, according to ITU, of the global unconnected population live in places that are in the rural areas that we know that are badly covered. That's number one. Number two, a large number of those are women, because we know that approximately 48% of women, as opposed to 58% of men, are actually able to access the internet. And that percentage is even higher in Africa at 37%. So beyond infrastructure, affordability, lack of digital skills, and limited relevant content, this is very important. The relevant content remains also a barrier that is unsung, really, because you may find somebody with a handset. It is connected, but they don't know what to do with it, because everything they see probably is in English or French, and they can't speak that. They have no idea about using this handset for accessing care facilities, accessing financial facilities, and other things. So I think it's very important that among the barriers, we add in the lack of relevant content that is localized and contextualized. But that doesn't take away from the fact that we still need to invest in infrastructure, deploying new infrastructure, upgrading the old one, right? Because we know that even on those towers, there's new technology coming. There are new services that are based on these new technologies coming. So we can't slow down, really. And I say that because in the past, we have let developed countries go first. But the technology is such that we can go now at the same speed as them. And I'm sure sometime this week, we'll be talking about 5G. And 5G doesn't have the US or UK or whatever on it to say they are the first to use it. So we need to put things in place. But another investment that we need to make is the design and implementation of policy and regulatory frameworks that actually fit our situation. We don't go to lift from somewhere else and then come and just say we have a regulatory framework. We need to really sit down together and think about that. But on top of that, the third element that I see, and that I think Ishad mentioned as well, is relevant digital skills. Mm-hmm. And we are really, as ITU, very seriously taking this up. We have initiatives, not only general initiatives, but initiatives for women. You've heard me many times talk about African Girls Can Code, which is an initiative that we've had. But there are many of those. But those three things: to continue infrastructure deployment and improvement, to put in policy and regulatory frameworks, and to build skills, not forgetting the right and relevant content.
Thank you so much for that insights, Andrew. A parting shot as we wrap up this session. COVID-19 has accelerated the need for us to close our digital gap. As a final reflection, what is the single most impactful action you can take in leaving no one behind? If you can just say it in 30 seconds. Irshad?
Yeah, that's a tough but really important question, Angela. I think we've got a lot to do and a lot of opportunity in Africa. I think the main thing that we need to do is shift our mindset towards digital and no longer think of digital inclusivity as something separate from inclusivity in general. And if we're going to start with that, we really need to start from a perspective of education. So digital literacy and education in the wider context to be really a hybrid framework system that occurs in Africa. I think then we'll create the right market and societal forces to really make a difference. You know, Nelson Mandela said, education is the most powerful weapon we can use to change the world. So I believe let's take it to the hands of the people and put the power of digital in their hands.
A spot on, Irshad. And Andrew, what's your parting shot as we conclude?
Let me first of all agree with Irshad, because I'll take that and add it on mine, because he's absolutely right. But on top of that, this mindset will not really take place without our governments, our policymakers buying into it. That's number one. But also making the right investment, the right thinking about investing in digital. We've seen what COVID has done. We've seen that our citizens who become useful are really the ones that rush through the area of digital. And so on top of what Irshad has said, I want our governments to realize that this is not something of an afterthought. Number two, they have to make the right regulations and not think about this as just a revenue generator. But number three, I want to urge regulators, I want to urge private sector and other stakeholders to see themselves as one unit. And that is why at ITU, we are promoting 5th generation regulation, which is collaborative regulation. Any other regulation.
All right. You've heard it from Irshad and Andrew, their parting shots. I hand over the stage back to Max to take us into the next session. Thank you, Max.
Thank you very much, Angela, Irshad, and Andrew, and also thank you very much, Anne. I think it was a great presentation and discussion on obviously the progress that's been made, but also on the road that really remains ahead of us if we want to ensure that we're not leaving anyone behind. And I particularly like MTN's CHASE acronym, which works actually as a really good mnemonic device when you try and think about digital inclusion. It certainly is about coverage, but it's also about handsets, it's about affordability, it's about services, and it's about educating through digital literacy. So thank you very much to all of you. And now, as promised, for the second part of this session, we're going to look towards financial inclusion. So in the past decade, and unfortunately over the last year and a half in particular, mobile money has really played a critical role in delivering vital financial support, basically allowing small businesses to keep operating, but also providing safe and contactless ways to pay for food, to pay for electricity, and many other life essentials. So I will now turn to my colleague, Ashley Olson-Onyango, who can share some of the highlights and the trends in terms of mobile money and financial inclusion in Africa that are taken from our 2021 State of the Industry report. Over to you, Ashley.
Thank you, Max. Welcome to the second half of this session. So I'll briefly present to you an overview of the mobile money landscape in Africa before discussing the market and its future opportunities for growth with Anne-Catherine Chikonte from Orange. Africa has been a trailblazer for mobile money and is home to 171 mobile money services. This is over half of the global services available today. Not surprisingly, Africa is the largest mobile money market in the world with respect to number of accounts and volume and value of transactions. In 2020, we saw strong mobile money growth in Africa, where we saw registered accounts across the continent grow 12% to 562 million in the year, which is quite impressive. Interestingly, though, we saw higher growth rates in activity than we did in net accounts, offering insight to the heightened role that mobile money played in the lives of many last year. Active accounts grew by 18%, reaching 161 million. Transactions grew 15% to 27.5 billion. And value of transactions, the most impressive growth of all, increased by 23%, amounting to $495 billion. It's notable to highlight that Sub-Saharan Africa accounts for the majority of registered mobile money accounts in Africa, over 97%, contributing proportionately to transaction volumes and values. The COVID-19 pandemic certainly played a role in the growth of mobile money across the continent and in Sub-Saharan Africa, offering a safe and contactless mode of payment in times of need. In Sub-Saharan Africa, mobile network operators responded to this need, registering 4.4 million more agents in 2020, making it easier and more convenient for users to reach an agent near them. Regulators also took action, putting measures in place in response to this pandemic, including simplifying and streamlining processes to make it easier to sign up for a mobile money account. While most value remains in person-to-person transactions and cash in and cash out, sustainability of mobile money revenue and margin lies in value-added services, digitalization, and a move to payments as a platform. With this in mind, I'd like to explore the trends and future opportunities in the African mobile money market with my guest today. I'm pleased to introduce you to Anne-Catherine Chikonte, the Head of Diversification, Mobile Financial Services, Orange, Middle East and Africa. Welcome, Anne-Catherine.
Good morning, Ashley. Good morning, everyone.
Great. So we're going to kick off. So we know that COVID-19 accelerated the use of mobile money globally. What do you think were the greatest changes in usage of mobile money across Africa caused by COVID-19?
First of all, allow me, Ashley, to thank you for hosting this part of the session and for the great insight you have just shared on how mobile money has evolved in Africa. COVID-19 has not only been a sanitary crisis, it has been a huge shock for our economies and for our societies. So it has kind of prompted us to review the way we work, the way children learn at school, the way we do medical consultation, and all this has actually resulted into an acceleration of digital usage. So the figures you have just presented show how much the use of mobile money has been accelerated by COVID-19, particularly in Africa. So during the crisis, restrictions on movements or complete lockdowns, plus the risk of actually handling cash, have made mobile money, a safer option to maintain financial activities. A bunch of measures has been taken. At Orange Money level, these include, as you mentioned, few of it, fee waiver on some services, in good understanding with central banks. There were also regulatory evolutions with more flexible KYC or increased transactions and balance limits. And finally, government and NGOs has relied on Orange Money to disburse some social or humanitarian financial support to population. We saw it in Côte d'Ivoire, in Mali, and in Jordan. So I would say all these actions have helped reaching out to new users and kind of encourage new services. At Orange Money level, we have also experienced a greater use of our mobile application, even though USSD remains dominant. So that is the big picture of the changes we have observed.
Thanks, Anne-Catherine. I hear a good thread of partnerships and dialogue with regulators, the central bank, NGOs, so that's great to hear. Given the evolution we have seen in mobile money and the scale reached in Africa over the last decade, what do you think lies ahead for the future of mobile money in Africa? And particularly, what do you foresee as the key differences between Sub-Saharan Africa and MENA looking ahead?
Okay, you're right. Max also mentioned it earlier. Over the last decade, mobile money has experienced an exceptional growth in Africa, and particularly in Sub-Saharan Africa, contributing to the United Nations SDGs in so many ways. Now, at a global level, we can see that women are overrepresented among the unbanked, and account owners tend to be more in urban areas than in rural areas. So there is still a lot of work to be done to reduce both gender divide and urban-rural gap on financial inclusion as it is actually on digital inclusion, which has been highlighted by previous panels. Then once you open a mobile money account, this is just a first step of the process. You then need to use it to take full advantage of the range of services you have access to. So in the figures you show, we saw that in 2020, there were 560 plus million mobile money accounts in Africa, and less than 30% of which were active on a monthly basis. So there is also a usage gap that is ahead of us. And now regarding active accounts, we see that transaction are still largely dominated by money deposits, withdrawals, and domestic transfers. So there is a huge space for more diversified usage. We already see that mobile payments, including bulk disbursement, salary payment, bills, online merchant payments are growing. We also see that there are more and more users receiving international remittances directly into their mobile accounts. So, and finally, I will say adjacent financial services such as credit, savings, and insurance will need to be enhanced in the product portfolio of mobile money operators. Now, regarding the differences between Sub-Saharan Africa and MENA, I would say mobile money has been historically strengthened in Sub-Saharan Africa. And in MENA, access to banking services are higher than in Sub-Saharan Africa, especially in urban areas. And we notice that out of urban areas in MENA, the needs are probably close to the one we have in Sub-Saharan Africa. So there is an opportunity as well for mobile money in Middle East and Northern Africa. And the region is just at the beginning of its journey on mobile money. So, and another difference I would also like to underline would be the higher smartphone rate penetration in MENA versus SSR, which will probably result into a greater use of mobile applications to do mobile money transactions and a better customer experience versus USSD.
Great, thank you. So, Anne-Catherine, you mentioned about the kind of evolving business model from transactional model to payments as a platform when you mentioned the adjacent services, et cetera, value-added services. How is Orange Money approaching this evolution? And can you tell us about the role that Orange Bank is playing in this evolution?
Okay, sure. Our ambition is to diversify the range of services we offer to our customer with frictionless end-to-end experience. So we have been growing our ecosystem to do so. For example, international remittances in Western African, in the WAMU zone, at the beginning of the journey, it was quite natural for Orange to extend the transfer service that was already offered at domestic level up to cross-border, thus supporting south-to-south remittances. Then we gave the possibility to customers in France to send money to Africa as a strong alternative to existing north-to-south remittance service providers. And in addition to Orange Money account-to-account transfers, we have been increasingly connecting to money transfer operators to extend the convenience of international transfers. So all this goes in the directions of increasing volumes and decreasing costs of remittances. Digital microcredit is another example. You mentioned Orange Bank. So the digital microcredit is typically a loan of less than 150 euros over a month. And above all, it is a mass financing instrument accessible to the informal sector, which is the main job provider on the continent. Today, 83% of loans are made outside financial institutions, which give a huge potential for the mobile lending market in Africa. So Orange Bank Africa was launched in Côte d'Ivoire in July 2020 in partnership with the NSCA Group. It is an innovative, digital, and inclusive bank. So Orange Money customers in Côte d'Ivoire can access tic-tac loans as low as €8. So the way it works is that Orange Bank Africa will be producing the credit, and Orange Money Côte d'Ivoire will be distributing it to its customer. And this is a complement to the offer of traditional banks. And on another geography, Orange Money in Madagascar, in partnership with local microfinance, have been offering digital microcredit since March 2018. And this digital microcredit, if distributed in a responsible way, can really assist the informal sector in the current crisis. So this is a topic that is particularly close to my heart.
Thank you, Anne-Catherine. Really interesting. We know that, the first element is getting people access to digital financial services, the mobile money services that we have, the core functions of transactions and cash in, cash out. But the value-added services that you talk about, the digital credit, is going to be a game changer for a lot of people on the continent. We look forward to seeing the growth and watching that with you. Just to say thank you for joining us today. Your thoughts have been really interesting, and I know our viewers have been really intrigued by what you have to say. So thanks so much.
Thank you, Ashley. Have a great day.
Thanks. And back to you, Max.
Thank you very much, Anne-Catherine, and thank you, Ashley. I think mobile money has definitely been a great African success story of growth, of opportunity, but also of resilience in COVID times. Now, this takes us to the end of this session. I would like to acknowledge our funding partners who have supported us in producing all the content that we discussed today. That's the Swedish International Development Agency, SOTIR, the United Kingdom's Foreign, Commonwealth and Development Office, FCDO, and the Bill and Melinda Gates Foundation. I would also like to thank all of our speakers, as well as my colleagues, both on stage and in the background, for putting this great session together. And finally, thanks to all of you in the audience for joining us this morning. You have a very exciting agenda ahead of you in the next 3 days, and I really hope you make the most of it. So thank you very much and enjoy.